What's going on, everybody? Liam O'Reilly, Vermont economic realtor. I hope you're doing well. Today, we're going to take a look at the Redfin weekly update from last week. We're going to look at the Federal Reserve's balance sheet and talk about what's going on with banks as well. What's going on with the banking crisis and the money that they're borrowing from the Federal Reserve to stay afloat. Before we get into it, just wanted to say sorry for the delay in getting this video out. I know it's been a few days, and I wanted to say thank you for all the comments on my last video with Gary Winslet about the Vermont housing crisis. I had a great time talking with him. He's a very knowledgeable guy about the market and economics in general, and it was just a blast having him on. So moving right along to today's story, right out of Redfin here, and the headline really says it all. Housing market update. Buyers can't buy if sellers won't sell. And this is something we've talked about for months now, but if we look at the sub-headline there, new listings of homes for sale down 25% from a year ago, marking the 8th straight month of double-digit declines. So the story continues basically, like we've been saying. Now they say that listings might have fell more from a year ago because Easter is earlier this year, so that affects things a little bit. People aren't gonna list their homes heading into the Easter holiday. Now, that being said, we're well past Easter now. It's the 17th of April as I'm recording this video, but and the week after Easter, at least here in Vermont, was pretty promising for new listings. There was a lot of new listings that hit the market, possibly because there was a lack of listings headed into the Easter weekend. But let's take a look at the trends that are going on. They talk about the U.S. housing market price declines. I think it's about 2.3%. See if I can find it in this article here. Right, U.S. median home sale price fell 2.3% year over year. But if we look at the chart, this is something we've talked about in other videos. So yes, the median sales price is down year over year, but it's not trending down. It's trending, it's staying pretty consistent. And the month over month data, the month over month trend is still trending upward, as you can see from this line. So the orange line, if you guys don't know, is 2023, red line is 2022, blue line is 2021, and the gray line is 2020. So we're still well above 2020 levels, well above 2021 levels even, and where home prices continue to increase. And it's really driven, if we go back to the title here, buyers can't buy if sellers won't sell. If we look at the new listings, so biggest decline in new listings, minus 47% in Oakland, really California, San Francisco, San Diego. My guess is that new listings have declined most in areas that don't have a lot of new construction coming to the market. And when you look at Tennessee, they quote this realtor here from the Nashville, Tennessee area, and that's what they talk about. Is they talk about new listings right here. Builders went big on the outskirts of the city, over the last few years, and now they're offering incentives to attract buyers to the point where individual sellers are having a hard time competing. So this is something that we talked about in one of my more recent videos when I mentioned that home builders are printing money. Basically, home builders are able to cushion their profit margin. They're able to make a little bit less money, but still stay in the black and offer buyers incentives because they're producing at scale, and they're operating as a business where most homeowners aren't. They're just looking to get the most money for their home, and they're saying, "Hey, my neighbor got 500,000, I want 500,000." Where maybe the market shifted or their home isn't as updated, and buyers just aren't there. Where new home builders, they're offering a product that is ideally turnkey. I mean, not always. Not new construction. I think you should always get it inspected. At least here in Vermont, there's not a building code enforcement agency or agent that comes in and makes sure that the builder is completely up to code, especially for single family homes. So most builders around here are reputable, and most builders, do build up to code. But having a home inspection to make sure that everything is as it should be and that the builder did follow the rules is always a good idea when purchasing a new construction property. I digress. For the most part, people purchasing new construction homes they're purchasing something that ideally won't need a lot of work. Assuming it was built properly, they're not going to have to maintain it in the years to come. So if you look at similar priced existing homes on the market, that are older, the home might have a little bit more character, sure, but it's going to need more maintenance. It's been lived in. It's not going to be as fresh as the new construction homes that are bringing to the market. That are being brought to the market. Let's see here. I think they mention, so basically new listings are down in every city across the country that Redfin tracks. They talk about the city that dropped the least. Um, I wanted to find that for you folks. Pending home sales, new listings. All right, yeah, new listings declined in all 50 of the most populous U.S. metros. They declined least in Texas. Fort Worth minus 7% year over year. Austin minus 11%. Dallas minus 11%. Now, I'm not super familiar with Texas, and I'm not familiar with these markets, but the reputation that Texas has is that they can build. There's a lot of freedom with as far as builders go, and people can put up massive subdivisions and things like that, more than they can in other towns. Right. This is why places like Austin are experiencing price declines, in my opinion. But at the same time, they have the least amount of new listings coming to the market. Right. So there might be more volatility on the price side of things, but there's still homes there for people to buy. Or like Nashville, like that realtor quoted that we mentioned earlier in this video. She was talking about how new listings aren't really an issue in that market, where for the majority of the markets across the country, new listings are an issue, and new supply isn't coming to the market fast enough in most places. So let's just take a quick look at these charts before we go into the other videos. So median sales price up. I mean, the story's pretty much the same as we've talked about in a lot of other videos. Obviously, home payments way up as interest rates are high, 6.27%. They're talking about. They also said, look, I thought this was pretty crazy. So we've talked about this a lot. It's the move up buyer that seems to be holding supply away from the market. People are locked into their low interest rate. So this last week's average before Easter, so I guess almost 2 weeks ago now, was 6.27% for an interest rate. 85% of homeowners have a rate far below 6%. Now, I don't know what far below means. We could probably click that and find out. But if we even just say below 6%, 85% of people owning a home have a rate below 6%. It's pretty tough for them to want to purchase, especially a larger property, take on a larger monthly payment at a higher rate and give up their 2, 3, 4% mortgage. Pending sales, way down. Pretty much the same story as we've seen the past few months. New listings of homes for sale, way down. So less supply on the market, less transactions going on. Now, one other thing I wanted to mention about this article. Sorry, I'm jumping around here. They talk about here the Fed has made some progress cooling inflation with rate hikes, but there's still work to be done. They talk about how because of the positive economic data that oh wait, what did he say here? I thought he was talking about how rates were going to continue to rise, that the Fed was going to hike rates. But the Federal Reserve, when the bank collapses happened a few weeks ago, they started to increase the size of their balance sheet by offering lending to two banks who need it. They had their emergency lending program where they offered face value for bonds. I'm not going to go too far into it, but essentially they started to increase the size of their balance sheet. And that, I mean, in my opinion, spiked things up a little bit. I mean, you can clearly see the little hump there when they opened up this new program to keep the banks afloat. And I think that really sent a shock through the economy and gave some stability, smoothed the waters a little bit, right? There was pretty turbulent waters, and that kind of smoothed things over for a little while. We'll see what happens moving into the future here, but with the Federal Reserve hiking rates or pausing rates, at the end of the day, if they're increasing the size of their balance sheet, that is still a form of quantitative easing. That's still adding more money into the system. And although banks are tightening their lending standards as we look here, so this is a story out of Marketplace talking about how talking about the Fed's action, right? Spring into action and offer new loans to banks. But these banks are starting to borrow less, and they're slowly starting to wean off. But things are still not good. This is certainly not business as usual. The patient is still not in good shape and will be, I think, debilitated for a minimum at minimum, oh my goodness, will be debilitated at a minimum for quite some time to come. I apologize, folks. So banks are still borrowing way more than normal from the Federal Reserve because of the new systems that they put in place, which is increasing the size of the balance sheet, increasing the money supply, and at the end of the day, it's quantitative easing. I think. So whether or not rates are high with the Fed funds rate, we're still, you know, offering stimulus and stimulating the economy in certain aspects by not letting banks fail. Which I don't know. You know, it's tough to argue one way or the other. Is should we just let these banks fail and deal with the economic consequences, or is easing the pain through stimulus the way to go? It's tough to say. Anyway, Liam O'Reilly, Vermont economic realtor. I'll leave all the links in the description. Apologize for the delay in getting this video out and getting more videos out. I was away and then had a busy week, but I'm back. I am looking to be consistent as usual in videos and give my opinion on the housing market. Going to have a Vermont specific video coming out either tomorrow or some point this week. So look out for that. And if you're looking to buy or sell a home, my contact information is in the description. Leave a comment. Love to know what you think. See you guys in the next video.